Hello and welcome. This is the Insurance Pro Blog Podcast. This is episode 435. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance.
You didn't even know the internet had a favorite podcast about life insurance until you found us.
Congratulations and welcome.
You won the lottery.
Today is the day your life changes forever.
You know how you usually listen to podcasts over and over and then you go down the rabbit hole of listening to all that? Yeah, that's not going to happen. But we're glad you're here with us today.
Yeah. Hey, I said change. I didn't say change good or bad. I just said change.
Right. It's different. There you go.
Different is different.
Yep. So.
Yep.
We're going to talk about a totally new topic we've never talked about before. That's a lie. But we're going to talk about whole life insurance, so that should get everyone excited.
Cool.
But
can we talk about term insurance too?
Well, I mean, if we have to.
We want to.
We want to.
People love that.
I'll say something controversial right off the bat.
Oh boy.
They're both equally good.
I'll say something even more controversial.
What's that?
They're both equally bad.
You stole my line.
Oh, sorry.
That was the rest of what I was going to say.
Oh, all right.
It's almost like we talked about this beforehand. We really didn't. But yes. They're very specific tools for very specific reasons.
They are. So
that's a controversial take on the internet. I know it may not sound like it. That actually is. Because on the internet, everything is either, or the people that care, let me rephrase. The people who actually care to mention life insurance at all, it's either it should always be term insurance or it should always be whole life insurance. And there's no compromise in between the two.
There's a big moat.
Yep.
With alligators in it.
Yeah, that's right.
So the question to tackle, the notion, the idea here is a lot of times people will bring up whole life insurance in comparison to term life insurance and say, well, gee, that seems awfully expensive.
Yep.
Is it worth it?
Yep.
And we're here to tell you you're asking the totally wrong question.
I agree. My neighbor decided it was time to mow, so
that's cool. It won't show up in the post recording, yeah. And if it does, well, it'll only show up in your
there you go. Right. Yep. So you're asking the wrong question. If you're just comparing it, if you're comparing premium to premium,
yeah.
You're going to reach the wrong conclusion.
You are. And that's going to happen because life insurance, first, there are no bad life insurance products.
Right.
They are designed, they are brought to market to address specific objectives.
Yep.
So the problem is trying to match the wrong product in the wrong situation.
Right.
So we don't compare the cost of whole life insurance to the cost of term life insurance because we don't use whole life insurance for the same reason we would use term life insurance.
Right. Agreed.
Term life insurance exists primarily, exclusively, actually, to deal with the problem of dying prematurely and losing the income that would have otherwise been earned throughout the rest of your working life.
Right.
That's what you're trying to protect yourself against. This idea that, well, if I am 30 years old, 40 years old, whatever it is, and I don't make it to retirement, there are dollars that I would have earned that I will now no longer earn. And if my family is dependent on me earning those dollars, we have a problem if I die.
Right.
So to deal with that, I buy life insurance. And the best, most efficient way to do that is to buy term life insurance.
Yep. It's the lowest cost solution to solve that specific problem.
Mm-hmm. Mm-hmm. And quite honestly, the commitment people would generally have to make to whole life insurance to cover the same amount of death benefit need is generally unattainable.
You mean on the, yeah, absolutely. 100%.
If you're going to try and buy a term life policy for several $1 million, for example, and let's say the The cost of that's like $1,200 a year.
Right.
Whole life insurance comparatively is probably somewhere in the neighborhood of $15,000 to $20,000 a year.
Right.
That's a much, much harder budget to suddenly come up with if you need several $1 million of death benefit. Now, here's where it gets weird and frustrating and confusing to a lot of people. There are some who try to build extraordinarily complicated systems to convince you that it's worth trying to find all that money to just buy whole life insurance.
Right.
And they come up with fake economic systems about your accelerated human potential that don't really exist. Nobody's ever actually said this is a thing, but they decided it is because it sounded fancy and it might convince people to overspend on whole life insurance.
For the record, Brandon's not a huge fan of human life potential. He doesn't believe any of you have any potential. So that's what he said. I heard him. You heard it.
Come for the life insurance, stay for the demotivation.
That's right. As if a life insurance podcast wasn't demotivating enough. Yeah, no, you're totally right. It's I think one of my most common and recurring cringy moments in this industry have been when I hear someone, I've heard it on, conference calls, webinars, and I've heard it in person. I've heard it at people say it on stage.
Other insurance podcasts.
Find the money.
Yep.
Or found money.
Yep.
Call it. And that's basically a process of leading people through their finances and showing them how they can re-engineer things and reposition things. And I'm not saying that's always bad. That's neither good nor bad. It really depends on what you're trying to get out of it. But then manipulating all sorts of marketing isms to get people to buy something they don't want to buy. That's kind of where I come apart. And it's not that I think some people come away with listening to us, Brandon, at times going like, do these guys actually like life insurance or do they not like it?
We love life insurance, but we love life insurance in its correct application.
And we're not, if we show it to someone, first of all, if they're interested and they ask us to show it to them, we show it to them and they can come up with all the reasons that they don't want to buy it. That's pretty much the end of the conversation. Like we're not going to spend a whole lot of time trying to convince you that it's the bee's knees. Like that's just not a thing.
Well, or yes. And, or in this context that we're talking about, term life insurance for covering lost wages.
Right.
There may be other avenues you can explore that in addition to owning term life insurance, you would seriously consider owning whole life insurance.
Sure.
But you may be in a position or of a certain philosophical thought process that says, I don't care to go down any other avenues with this.
Right.
I just want to cover the potential of lost wages. So that's taken care of with term life insurance. That's as far as I want to go with life insurance. And I want to spend all of my waking hours worried about something else.
Mm-hmm.
And you know what? There's nothing wrong with that.
That's a perfectly acceptable answer, in your opinion. Like
that's cool. Buy your term life insurance and go do other things. It's wildly more fun than life insurance. I get it. That's cool.
Yeah.
But there are others who are going to say, no. There's a little bit something here to whole life insurance, or maybe my circumstances are a slight bit more complicated than just the simple person who earns a certain amount of money and needs to hedge the lost wages.
Sure.
So we need to understand what might be accomplished to put me in a better position, a safer position with purchasing whole life insurance.
Right.
And that is when the whole life insurance comes into play. It's not about the cost of one versus the other. It's the fact that one does something really well and the other one does other things really well.
Right.
And that's where they should be focused and purchased.
Mm-hmm.
So, term life insurance we buy to efficiently hedge the risk of lost wages up to the point that you retire. Term insurance is temporary. It's going to go away at some point in your life.
Right.
And look, there are some people who are going to advocate argue that, well, what happens if you're not ready for your term life insurance to go away? That can happen. We've met some people who are in that boat. I can't do anything about poor planning. So if you go out and buy a term life policy for 20 years and you get to the end of that 20 years, you don't have a lot of money saved, you're going to be working well into retirement. That's not a failure of term life insurance.
No, I mean, it did what it was supposed to do.
Exactly. It did. It had the death benefit for all those years. That was no problem or fault of term life.
Right.
The problem is more in your strategy and execution and needing to have approached it perhaps a little bit differently. But it's not a problem of term life insurance.
Right.
So where does whole life insurance shine, not sign?
Where do I sign? I won't know.
I would argue that there are kind of 5 distinct areas where we specifically look at whole life insurance or universal life insurance. We have a tendency to just call them the same thing. So the transfer of assets, especially when there might be taxes due, but just the cost of administrating an estate.
Yeah, you mean when someone dies?
Yep.
There are costs incurred by those that are beneficiaries or heirs. That's what I'm trying to think of.
Yep.
Just for you dying.
Correct. And this could be the estate tax, but it doesn't have to be the estate tax.
It's not most of the time.
Very correct. Very, very correct. But even people who are of much more modest assets will likely have estates that will incur some degree of expense.
Yes.
And it's not always easy to get access to the assets in the estate to pay those expenses in the very beginning of the process of getting the assets out of it and to wherever they're supposed to go.
Well, depending on where you live, I mean, you can't really get access to an estate at the very least until you've had a death certificate issued. Thus, the process of the executor can then go into force, blah, 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 blah. And depending on where you live, I've heard, depending on the locality, of places where it took a month to get a death certificate.
Yep.
Generally in my area, it doesn't take that long, but that freezes everything out. Like, what if there's not enough money, accessible to pay for a funeral?
Yep.
I mean, it happens.
Yes. Or what if there's not money to pay for whatever kind of maintenance needs to be covered for a home that we're waiting to go through the probate process?
Right.
Or automobiles.
The power bill still needs to be paid, and the property taxes still have to be paid, and all those sorts of things.
Some attorneys will work probate on contingency and wait till after the estate's settled. Some won't. It's nice to have options. If you can go to somebody and say, I hear you're really good, but you're going to demand a retainer before we start doing this.
Right.
If we have the money, that's a good thing.
Yep.
So life insurance can absolutely work as a way to deal with those administrative costs when they're due versus having to wait for the estate assets to become available.
Yes.
Now, similarly related, but slightly different, you already kind of ventured into the category of just basic, immediate final expenses at death.
Yep.
Funerals being the most common example.
Hospital bills.
Yep. Those are another ones
often
that can come up. So the use of whole life insurance, because whole life insurance specifically, universal life insurance kind of, but whole life insurance absolutely is guaranteed to be around when you die.
As long as you pay the premium.
If you pay the premium and you satisfy that part of the contract, it cannot be taken away from you.
Right.
So you can buy a whole life policy. You can buy a relatively small whole life policy with the idea that this exists solely for the purpose of paying for my funeral and settling any final expenses with the hospital or whatever else might exist.
Right.
That's a really, really good thing.
I know this is a gross oversimplification of whole life insurance, but I think it's worth, on a meta perspective, getting people to sort of think about it this way. And this goes a little bit back to the premium. And we've already said whole life insurance premiums always going to be a lot more than term premium. Okay, accept that. One of the main reasons is simply it is more of an accounting type reason than any, or actuarial reason, I guess would be the right way to say it. If you buy a whole life insurance policy, the insurance company is planning with very high probability that they're going to pay a death benefit on you at some point.
Mhm.
Term insurance, that is not the case.
Correct.
With term insurance, we don't ever know I don't know what the latest official numbers are. Do you? In terms of percentage of death claims that are,
No.
it
It's
hovers
always been
between
talked
like
about as
1
like
and
1 to
3%.
2%.
Yeah.
Yeah.
So 1 in 3% of term insurance policies ever pay a claim. That doesn't mean claims get denied. That's not what I mean. I mean, the probability of
policy
you
exists.
dying while you actually have the term insurance in place is low.
Yep.
That's why it's cheap.
Yeah. Again, doesn't make it bad.
No.
Not trying to bring that up to say, oh, don't buy term life insurance. No. That's it serves a purpose.
Yep.
But it's inexpensive because the risk of loss to the insurance company is relatively low.
Right. And the counterpoint to that is, with a whole life policy, the risk to the insurance company is quite high that they're going to have to pay a death claim on you at some point.
Yep.
So they have to take in enough money to do that.
Mm-hmm. They do. And they actually take in more initially than they need so that they can build to build basically a fund to help cover that expense. And insurance law is such that they're required to share some of that with you, which we'll get into in a little bit.
Yeah.
So another application for whole life insurance is just replenishing your savings that you spend down in retirement.
Mm.
So if you own whole life insurance, if you have a death benefit,
you're replenishing it for someone else, but yes.
Correct, yes. But if you have a whole life policy, you have assets, you have a little bit more liberty to spend money.
Yeah.
Especially like a husband and wife situation.
Yeah.
Because when one of them dies, there's going to be a death benefit that's going to help recover the lost money from spending the assets.
Yeah. Right.
It's actually a great application.
And having a whole life insurance policy means that it's going to be around.
Correct.
When that eventuality comes to pass.
Mm-hmm. Mm-hmm. And this is we're not talking like gigantic multi-million-dollar whole life policies in either of these past two contexts, the final expense piece or replenishing savings. I mean, these are $50, $75, $100, $300,000 whole life policies. They're not generally that huge, but that's where you could focus.
Yeah.
The sites there. And it does work. The other way that people sometimes do this is, let's say they are part of a pension plan,
mm-hmm.
and they want to opt out of a joint life payment and into a single life payment because the math works out better if they do that and then take some of that difference and buy a whole life policy. And then they have the funds to give their spouse the money to recreate that income upon death.
Yep.
That works. Somewhat more limited application given the tiny number of people who are parts of pensions these days, but definitely an application for individuals who are members of a pension plan.
Yeah. The only caveat I put on that one, which I've said before, is you need to buy the policy long before you retire.
Yes.
Don't wait.
Yep.
Until you're 68 and about to retire.
Right. The math rarely works out that you try to do that on the day of retirement, because then the cost of the whole life is probably going to wipe out.
If you can qualify for it.
Well, there's that. Yes.
I mean,
there's that.
There's a lot of health challenges that people tend to get in the I would say 55 plus.
Mm-hmm. Mm-hmm. More things have made themselves aware.
Yeah.
The other application for whole life insurance is business benefit planning.
Mm-hmm.
So these are things like providing an executive benefit to somebody and having the funds to provide the benefit and potentially recoup the cost of the whole plan through death benefit.
Yeah.
Or having life insurance on a very crucial employee.
Mm-hmm.
And sometimes that can be done with term and life insurance, but generally permanent styles of insurance are used because we don't know how long the person is going to be around, and there is some way to recoup the cost of that benefit, again, if there's cash value from a life policy.
Yeah, a lot of times those are kind of bound up together, but yeah.
Yes, correct. There's oftentimes the case that you may tell somebody, listen, we want to give you an additional benefit, but we're going to buy life insurance as a way of doing that, which will recoup our cost of doing it, plus give us the funds that we need if we need to replace you because you die.
Yeah. Because our business operations may suffer because you're no longer a part of it. So.
Mhm.
Yeah. Very common.
And then, of course, we would be extraordinarily remiss if we didn't bring up the fact that there is cash in whole life insurance.
Yep.
It is a very well-known, generally, and critical aspect of whole life insurance. And that cash represents a lot of things, and it can be used in a lot of ways.
Mm-hmm.
We have spent a decade plus highlighting this specific aspect of whole life insurance in the context of how it compares, very favorably, by the way, to other fixed income style investments.
Right.
And it has been our opinion that it's at least well worth considering if you're looking to build a fixed income component to your portfolio, because whole life insurance comes with an array of benefits that individual fixed income options outside of whole life insurance do not have in their entirety.
Right.
There are great tax benefits.
Mm-hmm.
There is an extreme protection of principal balance.
Yes.
That you do not get inside most other fixed income options, CDs or cash in the bank kind of being the only other option for which there has never been much of a concern.
Right. Yep.
And there are other things about the functionality of whole life and its cash value that has a somewhat non-intuitive ability to help build wealth, or at least extract more benefit from it than you might originally think, based on, for example, the cash value balance.
Mm-hmm.
So we've long mentioned that for any dollar of cash inside a whole life policy, the withdrawal rate is generally better than at least the 4% rule.
Oh, you mean like as a supplemental retirement income stream or something like that? Yeah.
Correct. So we can't compare, for example, $500,000 of whole life cash value to $500,000 of it's in the market.
Right.
And then we have to think about taxes, which whole life insurance doesn't have to contend with. So again, the actual value you can extract per dollar gets even higher than what you would have just sitting in the market.
Yep.
Now, of course, there could come a point where market accumulation is so much so that it wipes out that difference. That's for sure. But that's not as easy to do in actuality as it sounds theoretically easy to do in my experience.
Yeah, very true.
And there's just so much less attached to whole life when it comes to the functionality of using the cash value.
Mm-hmm.
There is no age 59 and a half requirement. Because it's accessible without income tax liability, you don't have to worry about taking the money out now, next month, end of the year, and what that's going to do to your tax bill come April.
Right.
So if you have an expense that needs to be covered in November, but you've already withdrawn a lot of money from your IRA, and you don't really want any additional income, you don't have to defer the withdrawal when it comes to whole life insurance to January 1st, because it doesn't matter that you took money out of the whole life policy.
Right. Very true.
It gives you a lot more flexibility in that sense.
Yes.
And then, of course, there is the age-old aspect that you can access the cash via a loan, and the cash value continues to grow. And that gives you the option to then take that money and pursue something else, whatever it is, or buy some major thing and either grow additional wealth from some other investment opportunity, or at least reduce the cost of acquiring that other thing, because you don't have to go out and, for example, pay financing charges. And you're not forfeiting the growth of that cash that you would forfeit if it were something that you liquidated stocks or you took the money out of the bank or something like that.
Right.
That is the core concept behind infinite banking.
Yep. Absolutely.
So,
but borrowing your money is not going to make you more money.
No, it just the simple sake of, or the simple act of borrowing doesn't suddenly make you richer just because you borrowed it. No,
that's a joke, because there's some people out there that imply that. If you borrow the money and do something worthwhile with it, then that's a possibility.
Yep. Yep. So all of these things that we just spent like 20 minutes talking about, none of them you can do with term life insurance.
Right.
At least not well. I mean, I suppose if you got really lucky, maybe you die at the right time as a final expense deal. And there are some business applications where term life insurance comes into play. But the need for permanent coverage in some of these aspects that we talked about, or simply the fact that cash exists to use, is something term life insurance is never going to do for you.
Right.
Now, some people will argue you could do some of these things on an individualized basis with other assets that are not whole life insurance.
Mm-hmm.
Good for you. Do that if you want to.
Yeah. Exactly. It sounds like some of those people that want to argue with us about whole life insurance, why they shouldn't buy it. It's like, hey, you definitely shouldn't if you don't want to.
Right. You can't do all of those things that whole life insurance can do, but you can do them individually. And if you feel like that's a better way to do it, go ahead and do it.
Yeah. Agreed.
I've done this long enough to see how whole life insurance unfolds.
Yep.
I've done it personally. Watched other people do it. I see what they get out of it, and I know it works. So your example of how you could take whatever other asset and do this and theoretically have more, in your opinion, I mean, maybe, sure, that's fine.
Yeah.
But there are these other things that you get from whole life insurance that you wouldn't have in that case, and perhaps we put those on somewhat equal weighting in our objective. So some of us want to do that.
Yeah.
And that's why we buy whole life insurance. But it is not. It has never been, and it will never be, about the cost of whole life insurance versus the cost of term life insurance.
Right.
The two are not the same thing. And they are not meant to try and tackle the same problems. So when people tell you that you should never think about whole life insurance because all you need to do is buy term life insurance, it's so much cheaper and everything is better if you just do that, they're putting their ignorance on full display.
Yeah.
And they're pretending like the only possible application for life insurance is to hedge the risk of lost wages.
Right.
And that is a huge percentage of the population that should be thinking about, talking about, and considering a purchase of life insurance. I'm not going to pretend like, I don't think we've ever really pretended, that the application of whole life insurance, especially in what we spend most of our time doing, which is really focused on the cash accumulation side as an alternative asset, that's a very small fragment of the population.
Yeah.
Like we know we're not for everybody.
Right.
We prefer it that way.
But I will say, one of the interesting things, I know we've said this before as well, is that many, many, many of our whole life insurance policy holders also have term insurance.
Yeah.
So you can have both.
We've had conversations at times with people who came to us to buy whole life insurance, and we designed the whole life policy the best for the objective of accumulating cash. Mm-hmm. But we look at their circumstances and we tell them, you're wildly underinsured.
Right.
That doesn't mean you need to buy more whole life insurance death benefit.
Right. Well, this budget you had gets you, $475,000 worth of life insurance. You need like 2.4 million. So you should consider backfilling.
Yep.
With term insurance to meet that income replacement need.
Yep.
That's typically what we're talking about. We're talking about someone who's in their 30s or 40s, the primary breadwinner that makes a substantial amount of money.
Mm-hmm.
So
we've even gone so far as to tell them, look, put less money budget-wise into the whole life policy and buy some term life.
I mean, if you've got to cut that back a little bit, let's make sure
for some reason
the
they don't
foundation
like
is covered.
That.
No.
But
a lot of times they don't. But let's make sure the foundation's covered first, and then we can do things.
Yep. So everything exists for a reason.
Yep.
It works very well when it's applied in its correct application.
That is right.
And that's all we really have to say about that.
Okay.
So I am Brandon Roberts.
And I am Brantley Whitley.
And we will see you next week.